All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I'm going to pause for just a moment. As you know, streaming services have been out here for us for a little bit. I just want to double check and verify that it is coming through. And yeah, so I'm just going to pause for about 20 seconds, wait till I get a thumbs up, and then we'll continue. Awesome. Thumbs up achieved. All right. Market, interesting day today. It's one where we woke up to a gap up on, this. And the headline's almost becoming funny because it's always this nebulous reports of trade deal progress, right? And it's always, well, there was a report, and you look at what these reports are. There's nothing new. There's nothing, there's no real progression that has happened. It's just optimism, right? And when you look at what the key issues are when it comes to the trade war and the trade negotiations between the U.S. and China, there's not progress being made. At least in the stuff that we see with actual facts coming through, there's not progress being made. Right, and so it's one of those where any sort of positive, the market is just no questions asked, buy, right? And you can see what it's done to the market over the last 2 weeks. It's kept the market up, right? And every one of these kind of nebulous reports has popped the market up. But has it gone anywhere in 2 weeks? It hasn't, right? The last time we saw reports, drive the market were these 2 days right here. These 2 days in February, we saw reports drive the market to a different level. But since then, we haven't had really any material upside driven from these reports. Even the U.S. President Trump's tweet last week, right, where oh, hey, things are great, we're going to sign a deal by the end of March, blah blah blah. We're not seeing real material progression there. What we are seeing during this time is some real material erosion in economic data. We're absolutely seeing that. Now, today's data, the construction spending, that was a December number, right? So, we're in March. We're in March. Okay, great. But we have seen overall a real erosion in the data. Now, it's not every piece of data. And in fact, we can go and look at certain pieces of data and go, wow, this is some really nice improvement, right? But in general, on aggregate, we are seeing an erosion in the data. That has been coming out. But stock market's off to its best start of a year in over 30 years. Right? When we get into a situation like this that's abnormal, right? I mean, this doesn't happen. That's abnormal. You start to think about the psychology and the pressures of the big money out there in the market. Right? You think, okay, what are the pressures for the big money out there in the market? Put yourself in the shoes. If you're a fund manager and you have $1 billion in assets and you're managing stocks, what do you have to do? Because it's a very different game than as a trader. Short-term option trader, fine. You just wait for the opportunity you want, and okay, you got it. Well, great, go. Who cares? Right? I mean, it's just whenever you like what specific setup you have, you go for it. But as a big-time fund manager, you don't have that opportunity. You're not sitting there and going, oh, okay, I like the MACD here, and I like this, and I like that. My risk-reward is this. No, you don't have that ability. The number you see on the screen is, what's the Dow up so far this year? Right? What's the market up so far this year? And in fact, let me put a performance chart up. And here you are year to date, and the market's up double digits already. Double digits on the Dow, even with today's sell-off. The S&P is up even further. The IWM, it's up even further. The IWM's up 17%. Are most fund managers keeping pace with the market? We don't know yet. Right? We just absolutely don't know yet. But what we do know is historically the answer is no. Historically, when the market goes down, fund managers underperform the market on the way down. And when the market goes up, fund managers underperform the market on the way up. Now, it's not every fund manager. It's not every fund out there. Okay, there are definitely funds out there that have a much better start to the year than what the market is. But you think about who has to move, who has to take action. If you're an underperforming fund, you're an underperforming fund manager, do you have the luxury to sit on the sideline? Can you sit on the sideline and say, you know what, I really think a big sell-off's coming. I'm going to wait for that. One more week goes by. One more week goes by. One more week goes by. No big sell-off. What do you have to do? You have to chase performance in the market. You have to chase it. You don't have the luxury to sit on the sidelines. Now, that's not every fund manager, right? That's not every situation, but that's a lot of the big money that's out there that gets put into that type of a situation. But also think about it this way. If you're lagging the market here and you're forced in, as soon as that market turns and your bias, you start to say, oh, are you really going to be, hey, I'm going to stick this out. I'm going to hold on to this. No, you're going to be quick to pull the trigger to get on out, right? And so we are in a market right now where, yes, the market's not gone anywhere in the last 2 weeks. But there's one very definite thing that we can expect over the next 4 to 6 to 8 to 12 weeks, this next period for the market. And that is increased volatility. Because of the way that fund managers have been forced in, that volatility is going to be higher. Now, it doesn't mean the market has to go down, right? Because you look at dips like today. Right, and we just come in and we put on a 1-minute chart for, today's action, right? And you're one of those fund managers that's been underperforming, and you finally see, hey, there's a dip. You get a chance to buy, don't you? Right? You get a chance to finally step in a little bit. And we're going to see some of these. Where we are absolutely going to see some of these. Where, some of those on the sideline that have lamented and looked back and said, man, I missed. They're going to be eager to buy these shallow dips, right? They're going to be eager to buy them. When we start to see them not get bought up, that's when the market will turn and be fairly ugly. But it's going to lead to an increased amount of volatility, and it's going to be both directions, right? It's going to be both directions. I got a text earlier this morning asking me if the market had finally turned, and I just sent back. I said, "Hey, what do you mean?" And the response was, "Well, are the bears now in charge?" And the answer was no, they're not in charge. I mean, one sell-off doesn't make the bears in charge, right? One little sell-off doesn't change the dynamics in a dramatic way. It puts the market back to where it was when? Oh, Thursday, right? Right back to where it was on Thursday. That's what we are seeing. So, it has to have some perspective. This is not the type of sell-off we saw back here in November. It's not the type of sell-off we saw back here in December. Okay, it is the type of sell-off we saw back here in January in terms of, the move and what is happening or what the metrics are even looking like here today. Now, could it evolve into something more major? Yeah, it could, right? And I fully expect that eventually it will, but I don't think you can look at today's action and say, well, you know what, the top is in, down we go, right? It's just absolutely down you go. I think you can look at individual stocks. You can see where some of the laggards are, some of the leaders are. And, if you zoom in a little too closely, that stuff gets all mixed up. I was told today that Halliburton has been leading the market. And I sent back, I said, well, show me some data that's showing that. And they showed me today's data, right? Just the minute chart for today. And they were spot on. Absolutely dead on. They're right. Today, Halliburton has outperformed the market. We have Halliburton down 0.48%. We have the SPY down 0.6%. So Halliburton has outperformed the market by 0.12%. You're right. Right? Absolutely. But you start to see these kind of forming where, you know what? The market's been going up over the last 2 months and Halliburton's gone nowhere. Right? You see these out there. They're all over the place. FedEx, for example. You even see things like JP Morgan, where, you know what, it's not, I mean, the market's back to its October, November highs. JP Morgan's not. JP Morgan's still 10% away, lagging, right? There's a lot of these out there, right? And you know, vice versa, they're the leaders, right? You know, the Twilios of the world and whatnot that have, you know, pushed into new highs and continue to lead the way. And, you know, some of these are getting hit pretty hard here today. The Adobes of the world, you know, this is where we're seeing some of the chaser money coming out a little bit. But overall, right, it's one of the very important things to do on a day like today in the market is, number one, keep perspective, right? Keep perspective and zoom out to a daily, weekly chart, right? That's all it takes to keep perspective is to zoom out to a daily or weekly chart. You know, you zoom out to a weekly chart, here you go. This is what it looks like. Not much, you know, not much. Okay, so you say, all right, you know what? It could turn into more. All right, well, let's go look at our market internals. Are they changing? Because the chances that they're changing are greater on a day like today than on a day like Friday or Thursday or Wednesday last week. So this is definitely a day and a time to look and go, okay, are things changing? Well, here's the bullish percent index. Any change? Nah, down 0.4. Now, when it's ultimately printed at the end of the day here today, it could change a little bit, but you know, there's no change to the bullish percent index. One of the things we've talked about to really say, hey, you know what, there's material change happening in the market. We need to see what? We need to see the market move outside of its average true range, right? This outside what it has typically traded. And its average true range here of late has been 27 points. Okay, 27 points on the S&P. Has it moved more than that here today between the high and the low? The answer is yes. Yes, absolutely. This is one of the first days in a long time that we have seen the market move outside of its average true range. And that tells you what? That tells you, okay, something's brewing. Something's brewing. If we see the market continue to have put on a couple days where it's moving outside of this average true range, it doesn't matter if it's up or down. The chances are bears are going to take a little bit of control. Okay, you know, if tomorrow the market's up 40 points and then the next day it's down 40 points, right? Is that really bullish? No, it's not. And so we're seeing the first sign of this. Is that, something that you look at and you say, well, you know what, all of a sudden, yes, the top is in, the bears are in control, down we go because of this one thing? No, right? No, it's a matter of an aggregation of a lot of different things. But we do have a crack there. We could take a look at the number of stocks trading above the 7-day moving average, right? If this is a bearish type of day, where we're seeing the bears really grab control, generally we start to see this number push down into the 120 to 100 area. It's at 216, right? It's a little less than 50%, okay, of stocks trading above the 7, but we're not in that really big bad bearish breakdown area. If we come and we look at the number of stocks trading above the 20-day moving average, we're going to see something similar, right? Where it's still 350. 70% of the S&P is still above its 20-day moving average. We're not in that big, bad, bearish breakdown area. And so this data would suggest that the best thing that bears can hope for right here is a topping process, not an event, right? That it's a topping process. And when we really boil it all down, when I go out and I look at everything that's happening out there, that's what I think we're talking about today is this process starting to develop of some sort of topping taking place in the market. Yes, ultimately this could be the top and just straight down we go, right? But that wouldn't be the norm. Most tops are processes. Most tops are processes like what we saw back here in September. You hit a high, you pull back, you retest. Okay, we hit that high last week. Friday held it. Today struggled to hold it. Are we seeing some topping process up here around 2,800 in the SPY? Yeah, we're starting to, right? We're starting to. But, there's nothing about this that says, hey, you know what, boom, straight down we go, off of this point, right? And so from a broader market standpoint, today the market vibe sits at 6, which does what? It turns it neutral. Okay, it turns it neutral. It's not bullish. It's not bearish. It could go bearish, fairly easily. It wouldn't take a whole lot. But, we're not seeing the majority of the metrics, really fold. We are seeing some small cap underperformance here today, right? We're seeing a little bit of that by 0.3%, but it's not monster. Transports aren't underperforming, right? So, financials, they're lagging a little bit here. But when you look at any of these over a 30-day period, we don't see a huge amount of lag. One of the things I think is really interesting about financials and to keep an eye on is there's some negative divergence really starting to creep in. And that's what we're starting to see creep into a lot of different areas. And as I was going through things this weekend, this is one of the things that I really kind of noticed, really starting to come in is, we see the financial ETF. It's up a little bit over the last month. But the MACD is actually not improving. Right, we're actually seeing momentum oscillators on the decline, even though we see some of these sectors moving on higher. So we have some of these bearish divergences that we tend to start to see, in a topping process. So some of that is coming in, but the market vibe, it's sitting here today at a neutral standpoint. So anyway. That's what I take from the market action here today and what we see. I did put in the notes earlier today that, and I don't have Thinkorswim up and open on this computer right now. But let me see if I can pull up. A 1-minute chart, and if we could see it here, because it sometimes will show up on just the SPY. Yeah, here we go. So you see this volume right here. This corresponded to, on S&P futures, this corresponded to that 20K mark, which tends to say, look, one thing. It says the chances of the market closing below this level by the close are very slim. That's all it says. It doesn't say, oh, well, we have to go down further. We're just going to go straight up or anything. It says the chances of closing below this level are very, very slim. If we do close below that level, look out below. But generally, that's not what we're going to see. And so, yeah, we saw a little bit of, push on lower and, a little bit of rebound back, about 18 points, right, off of its lows. But, that's what we saw kind of creep in. And so as I kind of look at some of the charts and some of the stocks that I would like to be short, the last thing I want to do is go buy puts when, hey, at the bottom is in. And, it's one of those where I can wait till close to the end of the day and say, all right, what do some of the setups look like, right? JP Morgan owes me a little bit for the whipsaw on Friday. Wasn't very happy about that. It happens, but absolutely got whipsawed. I don't regret the entry the exit in terms of, the reasoning and why I got out with the gap, that fresh gap into that, new short-term high. I wish it would have told me it was going to, just be a whipsaw, but it did the exact same thing here today. It was one of the early outperformers, one of the early leaders, and, has been taken under. And, this is the second time in 2 days where the stock has failed to hold anything in this 105, 106 area, which is this gap area. And basically suggests path of least resistance is lower, at least down to this 100 to 101 level. I've priced out the options, and I may be in by the end of the day here today. We look at something like a FedEx. Right? FedEx was holding up pretty well during the sell-off. And then let's see if I can pull it up 1-minute chart. It was holding up pretty well. It wasn't selling off all that much. And then it just, boom, it just, all right. It was a little delayed, but, decided to go and ultimately, turned down about $4 from where it was. But, it's kind of snapped on back here with the market. It's a market play right now, basically. We have this consolidating bands. We saw this shot lower. right here, hey, I was in it. I got out and I bought back into it, and I got knocked out as it jumped up a little bit more, but it still hasn't given that sign of, hey, directionally it's ready for that next strong move lower. And so some of my favorite downside options, just okay, do I really want in them here just yet? And I think the bottom line comes to, if today's lows get wiped out, yeah, I do. I want to be aggressive. I want to be very aggressive on the downside. Outside of that, things are just like Visa. Things are just like Visa. A little gap up, and we can see them hitting new highs here as early as tomorrow morning, and that is the potential. Okay. Again, just keep in mind, in this market, we have seen negative economic data drive downside activity and then be turned around just by trade news, or should I say trade talk rumor, right? So, without a big change in the market internals, without a full chart for the downside into the close, most likely here today. Now, there are some stocks out there that are giving some 3-7 downside crossover action. One of them, and this is on news, is AT&T. When basically it was reported this morning that Donald Trump, U.S. President Trump, wants to block or has, put up roadblocks to, to prevent Time Warner and AT&T from sit on a big fat dividend, and, you just forget about it. You just forget about it. But it is one that, will have some of these oscillations with this deal stuff. If it decides it wants to come back down to 26, 27, 28, it's going to be the same thing. It's going to be a big, fat, juicy stock, with a big, fat dividend that, still has some of these, turmoils in the short run. But when they're straightened out, investors kind of look at what multiple it's trading at, the dividend yield and everything else for the stock, and you remove some of those headwinds, or when they ultimately get removed, we will be talking about a stock that, has significant upside associated to it here. Okay. We also have, stocks like CRM here today with some downside 3-7 crossover. Now there's earnings here involved, so not really playable. But some banks like Citigroup with some downside 3-7 action. Fox, 21st Century Fox with some downside 3-7 action. But you'll notice it's nothing convincing. Right? There's nothing all that convincing about it and how it sits. IBM with some downside 3-7 action where, if the stock rallies 20 cents into the close, that's gone. So, just not a lot of very convincing type of price action that would suggest, hey, you know what, down we go. Now, I do think if today's lows get broken, it's a totally different story and a very compelling argument to be made that, hey, down we go right here, right now. And, but I do want to see that happen given what we see in the metrics. What I'd prefer, from a downside is to go after something that's been lagging rather than going after something that's been up like an Adobe or a Visa or, one of the high flyers in the market that may just be showing a few cracks. You take a look at some of the things like Activision, ATVI. This has been a company that, as the market's been going up, what's ATVI been doing? It's been going down. It has the same signal, the same price action as a IBM, as a Visa, as even a Citigroup. But it has been a big laggard. The chances of this getting sold more significantly going forward are significantly greater. Okay, significantly greater here overall. Even an NTAP, the chances of being sold are significantly greater. Here's an LB which jumped on Friday with earnings getting sold off here today. CarMax we talked about last week. It tried to shoot on up, but breaking right on back down here. And so you had that nice little shoot up on some low volume, not able to hold, breaking on down. Chances are new lows. It wasn't able to hold a very nice bullish signal. Chances are, new lows are coming into it. And so I'd rather go out to the downside of something like that than to go and say, hey, you know what, let's go short the market itself, or let's go and, let's go play a Visa or one of the high flyers that are out there in the market right now. So that's kind of how I'll be looking going into the close. But we'll kind of see how things shape up here, where things sit right now. We still see the market just kind of, right at its 7-day moving average, just right there. And, it will be interesting because we have not seen the market sell off into the close very often. We have seen some morning sell-offs. We have not seen a lot of closing sell-offs. Most of the closes have been buy-ups. Even on Friday, after the market took a significant drop, we saw the majority of the price action into the close on that upside. And so, do want to see kind of how we get into this close here, with the overall, market price action there. But, in terms of adding more exposure to the challenge, to the downside right here, I would like a little bit of confirmation. And I would like a little bit of cash in the pocket to be able to go and add to Halliburton if it's a little bit weak in the morning tomorrow. I'd be able to trade this down, sub 30 and even into the 28 level, which I think the longer it sits right here, the greater downside potential comes into play. And this is one that if it breaks 30, I do expect that a lot of the buyers that have been sitting here, that have been sitting here buying in, they're not going to want to be holders below 30. I think that could, lead the stock to significantly lower levels and even potentially a brand new low. Now, not in the time period of my option, but, a new low by the end of this month, by the middle of next month. I think that is, something that could definitely come into play with Halliburton. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.